Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're talking about, oh my God, $2 trillion, a debt facility by the banks, JP Morgan spearheading this event. That means they are taking money from Peter and Robin Paul. This cannot end well. Inflation, it will continue. The wipeout of the middle class, it will continue. Therefore, we need things to help you elevate above middle class. Otherwise, you will be in trouble in a few years. The banking crisis continues, ladies and gentlemen, and it's not going to go away because they're robbing Peter to pay Paul on all fronts. So stay tuned. Listen to what I'm talking about. Save yourself because nobody's coming to save you. And welcome. Stop struggling now. Gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, please share the videos because you never know who does not even understand what is happening right in front of their face while they're out here working hard day in and day out, living paycheck to paycheck. And the reason why I say that, 70% of the population, 74% of the population lives paycheck to paycheck. Interest rates are going to go up. Even if it's 0.25, that means your credit cards are going to go up. And inflation, it's going to continue to go up because when you bail out other companies, when you are giving paper for something that doesn't exist, a black hole, and you're saying you're borrowing it, then how are you going to pay it back? And if you can't pay it back, that loan you just received is leveraged as well. So that means that's going to be a default. So again, perilous times, ladies and gentlemen, and it's happening all over the world. But we're going to talk about the United States right now. First, we're at the Stop Struggling Now YouTube channel page. You guys have seen this before. SSN Academy, SSN University. It's the no guru zone because we don't charge for courses. We don't do anything except give you information that you need so you can succeed financially and get to that financial freedom. Now, please notice we have a join button over here on the right hand side. That's how you become a member of the channel. As a member of the channel, you receive special messages under this community tab. You also receive 1 or 2 videos per month specifically for me, and you also can be on any live stream and to discuss any subject matter that you want to on screen. Now, if you're afraid of the screen or being on screen, then you can remove your camera and an emoji will be in your place if you're fearful of the camera. Now, the other part, you have special emojis, by the way, if you're a member of the channel with an icon next to your name. And on Wednesday night live streams, only members with the icon can be in the chat room while everybody can watch our Monday, Wednesday, and Friday night live streams. Now, let's get into it. I want to show you something. You know how inflation escalated over the last 2021, 2022. Notice right here, you will see this headline. Federal Reserve takes additional actions to provide up to $2.3 trillion in loans to support the economy. You know, 2020. But I want to point out, this is April 9th, 2020. Just so you understand, wasn't inflation like 9, 10, 15% afterwards in 2021 and 2022? This is the type of thing that actually creates inflation, ladies and gentlemen. I'm getting tired of watching people online talk about, well, something, it's mumbo jumbo, something to the effect of, well, there's no demand, so therefore the supply chain and that's what's causing inflation or something of that nonsense. No, ladies and gentlemen, when you have $100 and somebody else comes from out of nowhere and puts $100 on top, they just increase the money supply. Increasing the money supply means your currency is worth less. It's that simple. There's no mumbo jumbo. So anybody out here, the government, the Federal Reserve, anybody talking this mumbo jumbo, the fact of the matter is when you start putting in loans that were not derived from any source other than their paper and their loans, they're saying, here, take $2.3 trillion and do what you want with it because you know you effed off $2.3 million already. That's $2.3 trillion adding into the money supply with your debt notes that you carry. I just want to clear this up because the government, economists, the Federal Reserve, meaning not economists, Federal Reserve, these guys are out here lying to people. All right. And now I just wanted to point out that was 2020. Here we are 3 years later, March 16th of 2023. And what do we have here? New Fed bank facility could see up to $2 trillion of usage, JP Morgan analysts say. Of course it's going to be 2.3 trillion or 2 trillion and beyond. They already have bailed out Silicon Valley Bank. What was it, 200 billion? They gave somebody else 300 and some million, or billion rather. I mean, this is insanity. Where are they getting this money from? And if they already messed off money, this is just like giving money to your friend that's broke. And he says, oh man, I'm going to pay you back next week. And you're like, you don't have a job. You don't make money. How are you going to pay me back? That means you're going to default. And who's going to hold the bag after you default? That's crazy. I am. Taxpayers are, ladies and gentlemen. That's who. So when you see another type of article like this, look at this. First Republic Bank is in on this as well. This is craziness. Here it is. Points out that 6 regional banks on their own have a combined 460 billion of uninsured deposits. 460 billion. 6 regional banks. This is just, the contagion is going to continue, ladies and gentlemen. So what do we need to do? You need to make sure you get those extra streams of income. If you don't have it right now, you have to figure out some means of doing it. And again, we have certain things down below in the description box. Get your free stocks from Robinhood and Webull, first of all. All right, they're down below if you haven't already. Most people have. Now, the other thing. I love what Miracle Cash and More is doing. They have stores. They're licensed. They're regulated. You buy an NFT. Yes, it's pricey, $5,000. Whether you get a UK NFT or a Benelux NFT, but check the video that I just dropped in the last 24 to 48 hours. And you will see the latest update out of Dubai when they went to the Dubai crypto event recently, about a week and a half ago. They came out with updates. We're talking about partnerships with the likes of a Vodafone, with the likes of other companies that actually have their stores in the UK or in the Eurozone, which could be Spain, France, Benelux. So they're making deals. Spain, France, Benelux. I repeated it. All right. The UK, Cyprus. Stores are opening in a matter of next week. A store is opening. 2-3 weeks from now, another store is opening. This is passive income that you can set it and forget it, a one-time buy. And yes, it's a risk. Investing in anything is a risk. So we talk pre-construction property as well. You have 0% interest, no credit check, no qualifying. You can get yourself into some real estate at rock bottom prices from the time they build it. When they finish building it, your property values traditionally have risen, which means you have instant equity. Search the channel for pre-construction properties. Now, here goes another article. Cash-strapped banks have borrowed $300 billion from the Fed this past week. This is March 16th, ladies and gentlemen. They've already borrowed $300 billion. They're talking about $2 trillion debt facility. They're talking about another $460 billion for regional banks. Do you realize how many banks there are in the United States? These regional banks that they're talking about, that's just maybe a few. 7, 8, 10? Who cares? What about the other 1,000 that are also subject to being negative? Because they have lent, people have defaulted. Therefore, they will never get that money back, and they resort to risky activity. Now, just wanted to get this out because, again, this is going to be a short and sweet video because I'm just tired of watching the middle class just getting burned over and over, and you guys aren't setting yourself up for future. You know, in the future, they are printing money as we speak. Not only these loans, not only is the Federal Reserve involved, not only is the FDIC underfunded. So nobody, if there's a bank run, everybody's not going to get their money back. It has to be nationalized. Socialism is in action right now, ladies and gentlemen. This is not good for ordinary citizens, us OCs. This is only good for when you are wealthy. When you are wealthy, when you are in the top 10%, you are loving socialism. You pay less taxes. You get bailed out. You get made whole. Ordinary citizens, middle class, and below, you may not get bailed out. You may not get any relief. Look what happened when somebody sat there and said, hey, I want to spend $360 billion, up to $360 billion, because not everybody qualifies for student loan at $20,000. Some people, majority of people are going to qualify for $10,000 debt relief. But if everybody can do it, then it's up to $360 billion, and we have a way to pay for it. Taxation on the corporations and the rich who are making record profits. States and certain citizens have a problem with that, but you don't have no problem with $2 trillion bailouts. You have no problem when you hear a bank is $206 billion behind. Come on, fellas. Come on, ladies. You guys got to wake up. They're wiping you out. You're smiling and you're sitting there going, man, how can I continue to pay these bills? They seemingly keep going up, and they are going to continue. They're saving the top 10 percenters. They're not saving you. All right. Come on now. You guys know what time it is. Look here. Here's billionaire Charles Schwab. All right. His wealth plunged, nearly $3 billion after his brokerage shares were hammered amid this banking crisis. Okay, look. He's on paper. Stock is used to be paper, so that's why I refer to it as paper. It's paper, ladies and gentlemen. If you had paper, which you can do, hey, let's say you start a business. You start a corporation. You say you have 10 million shares of stock. You say the stock is worth $1 each. That means your company is worth $10 million. If you're the chairman of the board and you happen to hold half of them plus another one, then therefore you could easily say I'm worth $5 million. Because if somebody buys your shares for $1, then therefore you are worth a certain number. It's thin air. But you would be able to borrow against it, like an Elon Musk, who has sold shares and who has 30 or 40% of his Tesla stock is being used as collateral. You can collateralize your $5 million just like them. You could get somebody possibly to give you $500,000, $1 million of a loan. It's thin air, ladies and gentlemen, because if you default on it, that $1 million has to be paid back to somebody. Hopefully, I illustrated that, how simple they are doing this. Now, the reason why I mention that is because billionaire Charles Schwab's net worth has plunged $3 billion since March 8th, and shares of Charles Schwab Corp fell sharply amid the collapse of Silicon Valley Bank. And why? Because investors are worried as Charles Schwab Corp is sitting on a significant amount of unrealized losses on its bond assets. And oh, by the way, have you noticed the Federal Reserve has been delaying any mention of the 0.25 interest rate increase? Because some of the people that are holding loans, soon as they get them, an increase of the interest rate could be 0.25 or more. Now you have to pay back even more money. It's devilish, ladies and gentlemen. So I just had to bring this up because this is just ridiculous what's going on out here. Because again, Federal Reserve in 2020 did a 2.3 trillion loan to support the economy. Federal Reserve, and they're doing it again now in 2023. So you can understand there's going to be more bank failures. There's going to be more problems with the economy. You have to understand you're going to need to make more money, and not only a simple equation is making more money. If inflation, just double everything the government says. If they say it's 6%, it's 12. Just double it. So I'll round down to 10%. To make this simple for you, you make $5,000 a year above the average annual household income, $60,000 a year. And now all of a sudden, it's the next year. 10% means to you, it cost you $66,000 a year to pay for the $60,000 a year. Anybody getting a raise of 10% from a job? Unlikely. Can you get 10% raise from your own business? Yes, you're going to increase prices 10% plus a little more to add profit. You're going to do rental income. You're going to raise your interest rate or your rental income 10% plus 5% more. So you're always staying in the profit. That's why you have to buy assets, ladies and gentlemen. And that's why here we call it Stop Struggling Now. Because for 4 years we've been talking about get your assets. And that includes businesses. That includes real estate. That includes getting your credit right. Because whenever you need to pounce on an asset that pays you, you can. Just some tenets when you want to be in the top 10% club, ladies and gentlemen. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why you can't give up, ladies and gentlemen. They're doing everything in their power to save the top 10%. The top 10% are in the financial businesses. Therefore, unless you're in that financial services, financial sector, stocks, bonds, banking, borrowing, then you're just going to be paying the bill as an ordinary citizen with your tax money. And your tax money is going to increase, not just from the federal level, but from the state level. Some people have opened up their bills for their real estate living in these so-called low tax states, and their real estate bills were like, wait, what am I doing here? You guys just raised it up $500 to over $1,000 in 1 year. That's because they have to pay for things somehow, and it's coming out of your pocket. So let's get on that train, ladies and gentlemen. Keep coming along for the ride, because we always have solutions, and I mentioned some solutions right now. I'm going to mention one right now. You know what? Dividend stocks. If you missed the Friday night live stream, Victor Marrero mentioned a stock that I completely forgot about until the end, and I'm glad he did. MVO. That's an oil trust, ladies and gentlemen. You know the dollar is backed by oil. MVO is giving roughly, dare I say, 18, 19% annual return on that stock. That's right. M is in Mary, V is in Victor, O is in Oscar for everybody on podcasts. I want to thank everybody listening on podcasts as well. Thank you so much for being here. And then come along for the ride, ladies and gentlemen, because 2023 just got very, very interesting. And it's not going to bode well for the future of our great, great, great grandchildren and any other grandchildren that you're going to have, because guess who's going to be footing these trillions of dollars of notes? Your relatives. And with all that said, keep my head up. Keep your head up. And I'm out.